Yesterday, before the opening bell, I was looking to see if the S&P could get above this blue line and stay above this blue line, which is the 50-day moving average at 2100. And here is what the market did yesterday. So here, as you can tell, the S&P did in fact close above, it went above, well above the 2100 blue line level, and it closed at 2108. So the market actually did two things yesterday. The first thing is, like I said, it did close above this 50-day moving average. And the second thing it did yesterday is it confirmed the 200-day moving average would hold. In other words, yesterday I was wondering whether the market would stay above this red line, which is a 200-day moving average, and yesterday it did stay above, so it confirmed. Today, what I'm looking for is to see if the market could confirm that it's going to stay above this blue line, the 50-day moving average, or whether we're going to go below this blue line. Right now, we're out of this area right here, which is what I had called no man's land. And yesterday was also a Federal Reserve Day, and you could see on this chart, this is the 5-day S&P, and yeah, it's a little hard to read, but if you follow this square right over here, right around here was 2 o'clock in the afternoon yesterday, Wednesday, July 29th. That's when the Federal Reserve released its notes indicating that it wasn't going to change interest rates, and everything was pretty much status quo. And you could see the market basically took off like a rocket as soon as that release was issued. It was actually a little less volatile yesterday than I thought it would be. Oftentimes, what happens is at these last 2 hours of trading, the market goes down and up and down and up, and it's kind of wild. But but it did move up above the blue line after the release of those notes. Market's slightly down this morning in the futures market. It's down 0.28%. But overall, like I said, this is a 1 year chart. The long-term trend is up. Now, I will say that people can, if you look at this, what happened in this month of July, we're almost at the end of the month. You can read what's going on here two different ways. The bullish case is that we bounced twice now below this red line, 200-day moving average, or near it, 1, 2, and we held both times, and that is a sign of strength, and that suggests this market wants to keep on going up. The bearish interpretation of this exact same data is that unlike for the last 8 months or so, where we didn't even really touch this red line at all, we've now come into contact with it 1, 2, 3 times. Or if you want to look at it on a daily way, 1, 2, 3, 4, 5, 6. We touched it like 6 times, which we haven't done for a while. So the bearish interpretation is that, well, look, we keep hitting this red line. The market wants to go below this red line. It's just a matter of time. It's so interesting that bulls and bears can interpret the same data in totally opposite ways. For me, I know I sound like a broken record, but I want to wait and see confirmation. Um, Anyone who went crazy short here was like super bearish on the day it hit 2065. They've lost a lot of money if they sold out all their positions. So, like I've been saying this week, what I like to do is take some defensive measures. I took some of my money off when we were here. I put some of that money back here, or I'm sorry, up here, and today, most likely, if we have another day where we stay above 2100, I'll probably finish buying back all of the positions, the other half of my positions that I'd sold down here. That way, I'm not kind of going to extremes. I'm not trying to short this market. I'm not selling all of my positions. I'm taking some defensive measures, but I'm looking at the long term. And I think that for individual investors who are not trying to day trade, playing the long term is the best way to make money in this market. and the long-term trend I said is up. All right, guys, I will talk to you tomorrow.